quickly shift the focus to the commodity markets. We have Manisha joining in with the latest. Manisha, good morning.
Morning, and thank you for that, Surbi. I'm talking about the crude oil prices because we've seen strong gains overnight come in for this one. The first part of the week wasn't so strong, but we've seen 2% of gains overnight, and with that, we are trading at a one-week highs for the crude oil prices. The latest trigger clearly comes in from US, which has shortened the ceasefire deadline for Russia. Now, the US President Trump released a statement yesterday saying that Russia has 10 to 12 days now to agree on a ceasefire or face further secondary sanctions as well. Remember, it wasn't too far back that European Union also released an 18th package of sanctions on Russia, and this time around it has been on oil and energy. We have seen sanctions come in on in sense of price cap. There also are individuals and institutions which also are now facing restrictions, and apart from that, apart from the cut in the price cap as well, total 400 ships, shadow and direct, have been sanctioned now. So this really does impact the flow there. And we also have a JP Morgan report in the meanwhile suggesting that the further US sanctions, if implemented on Russia, could lead to a supply shock, as the OPEC Plus does not have that kind of a spare capacity, and that led to premium in case of prices there. Well, the support also comes in from the fact that we're looking at various tariff records now coming in. US has seen tariff agreement with Japan, UK, Vietnam, Indonesia, Philippines, and that seems to be supporting the risk sentiment and the belief that you could be looking at demand growing going further. Of course, there are deals on table as well. You still have China. The conversations for that started on Monday. And then you have Mexico, Canada, India, these deals still on the table there. The support also comes in after the OPEC report, which says that they are looking to pause further production increase from the month of October. Remember, OPEC has been increasing production from the month of April, and they are doing it until the month of September. October could be a pause, and that clearly is supportive for prices. There also is a statement from IEA which says that the global inventories have been increasing and accumulating at a rate of 1 million barrels per day, which is 1.5% of total global consumption. Markets looking at this number as well. And then finally, it is about the US crude inventories, which we have seen continue to decline quite sharply. The US crude inventories right now are at a 4-year lows, and they are 18% below the seasonal 5-year average as well. Not just the US crude inventories, the distillate inventories are also more than 18% below seasonal 5-year average, some of the factors which clearly seem to be in support for crude prices.
All right, Manisha, thank you very much for that. So oil in focus.